Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Saturday, November 10th, and here we are doing the weekend update, and want to cover the indexes, some commodities, currencies, and then I have a few stock ideas that I think will work out playing off of this thesis. So first things first, I'm looking for a market bounce off this point of control for the year. On the S&P futures, where you have your overnight trading, we got as low as 1363.50. The point of control for the year is 1362.30. That's what I have it at. So we should see some type of bounce here. And I also want to point out that on the actual S&P 500, you have the 50% retracement right around these levels too. So yes, there could be a little more downside. We're also around the 200-day moving average, which we pierced back in June, but only to see a quick reversal. I'm not saying necessarily that that's going to happen again, but what I'm saying is there's a likelihood that we're going to see some type of bounce back up towards 1400. So if you're looking to put some money to work, I think we're in an opportunistic stage here in the market. Now, one thing let me go back to the S&P. Let me bring up the hourly chart. We did sell into strength. But we did see a nice bounce off the lows. Now, we've seen a few of these now, so we have to wait for confirmation. But that's why you scale in. That's why you manage your risk and kind of go from there. So overall, I do think we're ready for a bounce in the S&P. If you're looking for a little bit of leadership, I'll get into some of that in a bit. But I'm looking at the NASDAQ here, and as far as a defined bounce, we have the point of control back in July, which we left clean and dry when we started this rally, and we have come back to that retracement. So what we're looking for is, generally speaking, this 25.75 level to hold on the NASDAQ futures. On the Qs, call it 63 is what you're looking to hold, and if we get that, that's good news, obviously. Then you look at a name like Apple, which looks like a name that, in my opinion, I think we have more upside here. I think there's a likelihood that we're going to see a short covering rally, and I'm sure there's been a lot of people talking about this, and that's fine. But we are back at levels where it's been right to be a buyer, and originally 604 or so was my buy, and on earnings when that came out, I tried to buy that dip, and it didn't work out, got stopped, and kind of left it at that from there on, and it just continued to drip lower. One of these days I tried to call or buy some short-term calls for a day trade. They worked out, but I ended up getting stopped at break even. But now I finally am in. Bought some shares. 537.12 is the buy. So I am in the green a little bit, so I have a little room. I will keep my stop under the lows though, because just to manage my risk appropriately. But let me also show the volatility index, and I think it's a little important because we're in consolidation here. The 50% retracement for the year is just north of 20, and what I'm looking at, let me bring up this chart. Okay. What I'm looking at is, the current month of November, still pretty early in the month, about halfway through. Is this 50% retracement going to hold? And if you watch my video on the volatility index, you'll see that these 50% retracements matter. And if you want to watch that video, go ahead and send me an email, nick@volumeprofiletrader.com, and I'll send that over to you. But I think it's a valuable video that you can apply to your trading. But as long as the VIX stays above this 1775 level or so, then it should be good on the VIX. From there, you have the 50-day, the 20-day around 17, and then you have the 50% retracement from last month just under those levels. So the VIX is saying that you need to look for a little more downside in the market. At least I think it's saying that. But the S&P is telling me you should be buying this dip. So price will tell, and we'll just have to wait. But from right here, right now, I think we're in an opportunistic stage in the market. So I'm going to go through a few names really quick that I think you can look at buying really. And the thesis is for a market bounce. So basically, a name like Cliffs, yes, I see that it sold off in the afternoon, but watch this in the coming week because we're back at levels where it's been right to be a buyer and it's been right to be a seller around 45. So if I get rid of all this noise here, we're at the bottom end of this range, 35 or so. The top end's around 45, and you want to play this range until it doesn't work anymore. And I just think that maybe we're in an opportunistic stage here in the market. Similarly, Caterpillar, just keep an eye on it. The only thing that bugs me about Caterpillar and Cliffs is we're under the point of control for the year. For example, 85.90 on Caterpillar, but we're at the bottom end of the range. So I think that you can define your risk. Yes, you have a lower high here, so it's something to keep in mind. But just let's watch it and see what happens. ExxonMobil back down to the 200-day, basically back down to the breakout stage, and we'll see if we can get a little oversold bounce. But these are all short-term trading ideas where you're looking to sell back up towards resistance, which, for example, on Exxon is $90. Now, Boeing, on the other hand, now this looks interesting, and I could see this thing, as I zoom out a little bit, I could see this thing maybe starting to get going. And the reason why is because we've been in consolidation for an awfully long time. I won't even count those lows. We've been in consolidation for a long time. We're seeing good buying here off of support. As long as you're willing to put your stop under 69 or so, you have a chance for Boeing to maybe break out. They are in a great cyclical cycle right now, and I think it's worth noting. Now, this is obviously a messy chart, but as long as you're buying against support, which is sub 69 is where your stop would be, it looks interesting, and I think it's one of those names that you scale into small just because we're already halfway through the channel now, and you kind of see where it takes you. Alright, Altria, this is a name that I did buy on Thursday, got stopped out on Friday, and then got back in. And we're back at these levels where prior to the breakout, we're just back at those levels pretty much. And we're seeing a nice little bullish engulfing pattern from Thursday. So I was close on Thursday, but not close enough. We'll see if this retraces. I own some 31 calls against this expiring in December. Bought them for 84 cents each. And just looking for a retracement up towards, the 20-day, the 200, the 50-day, anywhere north of 32, I'll look to take profits. But this is a trade that these calls could go up 50% in value, and it ends up being a pretty good trade. So just keep that in mind. Another name, and I don't know much about National Oil Well, but we're coming down to the point of control for the year, and this usually is a recipe for an oversold bounce. So just keep it in mind, 67.50. Put it on your radar. If you see the buyers come in, I think it's probably worth an opportunity. Earnings are already announced, so you don't have to worry about that. Verizon, 42.64 is where we close. We're at the 200-day. We're basically at a double bottom here. Remember, this is a big dividend payer, despite the fact that dividend tax rates are probably going up, capital gain rates are probably going up. People have to put their money somewhere, and at least you're at a low risk opportunity where if you look at the 200-day moving average, the last two times it was hit, was it right to be a buyer or seller? And it was clearly right to be a buyer, so just keep it in mind. Keep in mind we've been consolidating for basically 6 months now, and it looks like an opportunity. So, all right, let's just keep going. The euro continues to fall out of this wedge. This is been short, or I haven't been short. I shorted back in September against these highs, but I didn't get short. But I've been saying as long as if this channel breaks, which it looks like it will, or if this point of control continues to hold as resistance, which it did, you want to sell this euro. And sure enough, that's been the right trade. And if you look at the video from last weekend, the dollar index, I said this is the chart that you want to be long. Well, guess what? We're coming into resistance here where you're probably going to see some type of sell off against these levels, but the point of control is holding. So as long as the point of control holds, you're okay. But if it doesn't, if we start turning around, then obviously you don't want to be long the dollar. But that obviously means that the S&P equities are probably moving higher. All right, and last but not least, let's go into a few tech names. Apple, we already covered Apple. Cisco, this was a name that I recommended a short on a couple of weeks ago on the 19th. Target was down sub 1750. We got down to those levels. You saw some short covering, some buying at those levels. It didn't hold. It continues to move lower. However, the trade's over. So if you did take that trade, that was a good one. And Google, I think that we're at a bounce level here. And the reason why is because you look at what's happened. We've had 2 huge monster flush days. You could call it 3 if you want to say it's above average. And then from there, we've been consolidating below average volume, and we have broken down further. However, if you zoom out a little bit, which is sometimes necessary, what I see is a name that's been consolidating for a long, long time, and let's see if I can draw it right. It's been consolidating for a long, long time, where call it 650 has been resistance, and then you had a series of lows which continued to gradually move higher. Eventually they did move higher, led to a breakout. Well, guess what? We're here to test the breakout. Keep an eye on it. If we see the buyers come in like we did on Friday, this is probably worthy for a bounce towards 700. So not a bad trade. Just keep an eye on it. Realize, yes, the downtrend is intact, but we're in a position where we're against the point of control for the year. 50% retracement on the S&P. You may have some buyers come into these levels and try to take their shot. So if that's the case, then I think that you can take your shot with them and look for upside bounce towards 1400 on the S&P. So anyways, I hope this helps. Hope it gives you a few ideas to start rolling around in your head. I think going into the rest of the month, you're going to see some type of retracement back up towards 1400, and if that's the case, I think you want to be a part of it. Now, back when we get towards 1400, I do think that you want to start to scale out into strength. Stay involved to the long side off of this bounce, assuming we get one. If we don't, you get stopped out, you lose a little bit of money. But if you do, then you'll make some money. And I think going off the 1 year point of control usually works out fairly well. Another thing to point out, which is a little, it counters what I'm saying, but it's worthy to take note of. You have the VXX, which I've already talked about, the volatility index. But what I see is a series of higher lows, consolidation. If we do stay above 36 or so, which is the point of control for this month and the last 90 days, this could see a breakout. So if we do see that, maybe you do want to get long the VXX, and maybe the trade on the S&P is for more downside. There is that chance. But we are at a level, and I'm telling you, the 1 year point of controls, especially on the S&P, they're usually great levels. Now, if that VXX does hold up, you would be looking down towards 1345 or so on the S&P, which isn't too much further. And then your ultimate level, which would be a major signal, is 1310 or so on the S&P, which is the point of control for the last 3 years. So keep that in mind. I hope this helps. I hope it really gives you a thesis on using volume profile, how to apply it to your trading, giving you some ideas off of that, and realizing that the dollar's coming to resistance, the S&P's at support or perceived support, and we should see some type of bounce. So anyways, take care, have a great weekend, and I'll talk to you next time.